Forex Focus brought to you by IG, giving you our Forex market outlook, specifically in the realm of US dollar, and a couple of different routes that it could take in 2024, depending on your opinion of US dollar, of course, but also the lens that you view USD within, because it's been a mixed bag here in 2023. You go back to 2022, and one of the best years for US dollar in decades, getting back to parity with the euro, getting to $1.05 against the pound, dollar versus yen getting to 30-year highs for dollar. Also, over the course of the last couple of years, dollar really beating up on Australian dollar, and two markets that it hasn't actually been beating up on with any consistency in the last couple of years, Canadian dollar and Swiss franc. We'll get to that in a second. But you look at the 2023 performance, it looks very different. It's not this, one-sided dollars up, 8% on euro, it's up 10% on yen. And these are, I don't actually have the numbers for 2022 in front of me, but you get what I'm saying. In 23, you have the huge outperformance, another good year against yen, but you have the dollar dumping 7.5% to the Swiss franc, which has become pretty highly correlated with gold over the course of the last couple of months, especially. Both those markets being a little bit of like a anti-inflation fear bid. I don't even know what you call them at this point, because you can't call them flights to quality, right? The stock market's at all-time highs. So either way, and then you have the Canadian dollar able to eke out a couple percentage points against USD, and then euro and pound also able to outperform, but not by that much. And then Aussie, it feels like an up year, given that it just got back to unchanged, because that Australian dollar has gotten beaten up pretty hard throughout the year. But I want to start with the stronger side of the spectrum for USD and look at dollar versus yen, because it was another great year, right? Up over 8% against this yen. Japan not moving interest rates. The US, even though we're closing the year on a softer note for the US interest rate environment, still, net hiking interest rates here this year, and spent more time here in 2023 above 150 for dollar over yen than we have in the last 30 years, going back to the early 90s. You'll remember we hit 150 last year, but it was like for 1 or 2 days, and spent a couple days up there this year. Now, dollar gave back some ground at the end of the year, and that begs the question, if you're looking at dollar versus yen, historically, over the course of the last 20, 30 years, one of the lower volatility markets, usually, low margin requirements and a low spread value. It's a market that hasn't moved, 20, 30%, like some more illiquid markets, that is to say. But dollar yen has been one of the biggest movers, and that makes sense, right? The US has hiked interest rates from 0% to above 5% since 2021. And you can see how the dollar has, taken that into account against the yen, given that the yen hasn't hiked interest rates at all in that time frame. Whereas the euro area and UK and Australia and Canada have hiked rates over the course of the last 2 years. And so there's been more back and forth. Now, this could create the dollar yen to be a big mover to the upside if the US doesn't end up cutting rates, holds on to its high rates, and maybe inflation comes back out in the US and the Fed is looking at hiking rates again. Obviously, it doesn't look like that right now. Anything's possible. Market can turn on a dime. Could get an even larger move to the upside, but also could get a really large move to the downside if, interest rates in the US versus Japan diverge up to, a more than 5% gap and then come back down to only a 1 or 2 or 3% gap. You could see some big mean reversion in this dollar yen, a market that, prior to 2022 was trading primarily between 100 and 120 or 130. So could be big move there for dollar yen, whether you're looking at following the trend and this is just a blip higher back to 150 and beyond. If the U.S. relative strength continues, or even just like holds, whereas you could see the big mean reversion back down to the downside for dollar if those interest rate cuts in the U.S. start and then start to really pick up. So we'll see for that. And like I alluded to earlier, the euro versus the dollar, while there have been some volatile moments, euro getting down below parity against the dollar for a couple of weeks in 2022, it actually has been relatively range bound, relatively low volatility actually, and has been good for some back and forth. Market got above 110 a couple of times this year, moved back below 110. Market got down to $1.05, $1.06, bounced back into the middle part of the range. And this makes a lot of sense, right? Because the US hiked rates up to above 5%. The euro area hiked rates up to above 4%. And, of course, those gaps, they widened and they converged, and that translated to this back and forth. And now we've seen some dollar weakness to close out the year on the idea that US is going to cut rates in 2024. But if the euro area is also cutting rates at a relatively similar pace, then we'll get some of those, to the downside divergences and convergences, and that could make for more range boundedness. Now, of course, if the U.S. cuts rates by 100, 200 basis points and the euro area stays where they are for the entirety of 2024, then maybe you get that euro appreciation, or vice versa if the U.S. stays and euro area cuts. But it's been a relatively range-bound trade aside from a couple of outliers. And similar to that pound, and obviously pound and euro tend to be highly correlated, but that pound has seen some bigger moves. Saw some really large moves to the downside. And you might say, well, Frank, $1.05 is not as low as below parity, below 1 with the euro relative to the dollar. But on a percentage basis, that pound saw some bigger moves to the downside and saw some big bounce backs up to above 130. As there's been a common theme with that UK throughout the last 2 years, where at various points, the UK has looked like it was going to lead the way in interest rates higher. Its inflation was really ripping at certain points. And so it would bounce back against the dollar because, the interest rates, it was like, oh man, the interest rates in the UK are going to get higher than the US. They didn't. And then also at various points, we just saw UK inflation number come in way below expectations, and you see big moves in the pound to the downside. And so maybe similar to that euro, maybe similar range boundedness, but maybe some bigger moves around that range. And then getting into the Aussie. Now, this has been one of the riskier ones, and you might look at that y-axis for this chart and say, well, Frank, it's moved from 62 cents to 72 cents over the last year. That's not that wide of a range. On a percentage basis, that's pretty wide. And keep in mind that this Aussie piece was trading in the 70s and 80s consistently for the last couple of years prior to the huge moves that we saw in 2022. And so this could be one, and also you throw in the fact that Australian dollar tends to be highly correlated to the stock market, which of course tends to see bigger moves than Forex. Doesn't have to, but the S&P 500 might have an average volatility around 10 to 15%. In most currencies, average volatility might be more like 5 to 10%. And so this Aussie can kind of mimic that stock market and can also mimic that Chinese stock market, which can be even more volatile. That might see either a big move to the upside, maybe that Aussie regains a lot of what's been lost the last couple of years, gets back into the 75 to 80 territory that it's been in years past. But also, this is a market that's been in the 50s at certain points in the last 24 months. So can't rule that out, especially if the stock market does turn over at some point. Could see one of the bigger percentage moves out of this Aussie market. On the complete flip side, which is crazy because the commodity currencies, Aussie dollar, Canadian dollar, they tend to be highly correlated, but not so much. The last couple of years, the Canadian dollar has actually been really correlated to the US dollar, which you might say, how is that possible if they're in a pair going against each other? Well, just when the US dollar is trending in one direction against the rest of the major currencies, the Canadian dollar tends to trend in the same direction against those rest of the currencies. And you get, when you put them together, a relatively muted range. I mean, now this is, I've shown you plenty of charts, Australian dollar included, that have a range over the course of the last year of around, 800 pips or so. But that's 800 pip range in a 135 priced instrument. So smaller percentage moves, I'm saying here, out of this US dollar CAD for 800 pips from around 135 relative to 800 pips in Australian dollar around 65. You get what I'm saying, bigger percentage moves there than here. So potential for, of course, these markets can get risky whenever, but has been less volatile and less risky in the last year. Here, dollar CAD is the US dollar, Canadian dollar. They've been pretty closely linked. So maybe potential for a tighter range, a lighter back and forth trade if you're looking for something that is a little bit lighter in terms of the price action compared to that Australian dollar. Finally, this is an under the radar one, but could be the most extreme, as dollar is right there at its lows for the last 10 years, around 86. And it's poked its head below there for a couple of days over the course of the last year. But it's closing the year right there near its lows against the franc. And not the most popularly traded pair, but definitely a major pair and will be, I think, a major piece moving forward if this dollar weakness continues and gold moves higher and some of these fear gauges move higher. This market could move through its lows here. Now, if the gold market comes off a little bit and some of the fear is alleviated through that market and U.S. interest rates bounce back a little bit, this dollar could bounce back pretty harshly. So a lot of different angles on dollar going into 2024 here, and a lot of different types of trades for people looking for, scalping, people looking for longer term, swing trading and, multi-month mean reversion or trend following. Just pick the pair that looks the most in line with your opinions moving forward, and hopefully have a good 2024.